Hey guys, Chad from Kykeon Wealth here. I've had a lot of people recently asking me how they could get involved in real estate. And oftentimes the conversation that we have entails, the understanding that they go out and get the education and learn how to do all this stuff. And oftentimes for one reason or the other, there's no desire to spend the time, whether they have it or not, or they just don't have the desire to go out and learn the fundamentals of investing in real estate. So one of the alternatives I tend to offer to people is to become a private lender on a deal. And so I wanted to walk through, what that looked like and kind of show you some of the deals I have going on right now, or at least one of them, and show you kind of how that works. So I guess the first thing we should just talk about is what is private lending? So, whenever I'm doing a project with real estate, I can either go to the bank and get, traditional financing. I can go to a hard money lender, which are, there are companies set up that lend on, flips, which is what I'm going to be talking about today. Or, fix and flips for long-term investors. They just put the short financing on it. Or you have a private lender, which private lender is more or less the same as hard money. It's just someone that you typically know. So friends, family, or just associates that know what you're doing and that, will lend you that money. So, I think one of the reasons why people should invest or should become a private lender is it's a way to passively invest in real estate. And kind of like we talked about before, some people just don't have the desire to put forth the time or the energy in learning a new skill, or just putting in that time. And the reason why people would typically want to invest in as a private lender as opposed to other avenues is, they want to avoid stock market volatility and they want a more predictable return. So in this case, for private lenders, right now we're seeing anywhere from 8 to 12%. It could be a little bit higher depending on the type of deal, depending on the track record. And then another benefit of being a private lender, and one of the things, if you do decide to become a private lender, you always want to make sure that your loans are collateralized. So in this case, like what we do is with my private lenders, the money that they're going to lend me is going to purchase the real estate, the property itself. And then I'm also going to borrow the expected rehab costs. And so typically it's going to be about 70 to 75% of the after rehab value of that property. And that's going to be collateralized with a note and a deed of trust. And the note's merely going to spell out the terms of the loan. And right now I typically put notes on a 2-year note, and that just gives me some time to reposition and sell that property. Specifically, I'm doing these for the flips for the most part. And then you'll have that deed of trust. So what does that mean? It's just that if I default on that note, then you are the owner of that property and you're in it for 70 to 75% of what that after rehab value is going to be. So I'm going to go through some specifics so that makes a little bit more sense. So this is a typical deal. This is a deal I have going on right now. It's a single family home in St. Louis. And obviously I'm not in St. Louis, I'm in California, but I've partnered with an operator on the ground who I fully trust, who has systems and processes in place to go find these properties and has the teams to rehab these properties, and then has the network. So this particular one we plan on selling on Roofstock, which is just a roofstock.com. You can go check it out. It's a website for investors to purchase occupied properties. And this is what we're going to be doing with this deal. So we'll kind of dive into this just a little bit to show you what this deal looks like. So the purchase price on this one, we bought it for $50K. And I know that sounds unrealistic depending on what part of the country you're in, but there are houses that can be purchased for this price. And this one in particular, we are picking up off of someone who was trying to flip it, for whatever reason, unsuccessfully. And so it's already been renovated a lot on the interior. We're going to go clean some stuff up at. So really light rehab on this one, about $2K. And after rehab value, we're anticipating selling this one for about 72K. So you can see the margin for us. And the current rent on this property is $900 a month. So there is a tenant that is paying $900 a month to rent this property from us right now. So on these deals, the estimated hold time, we're looking at 12 weeks as our target. We have one that looks like it's going to be about 10 weeks to be wrapped up. That's probably the low side. And then 14, we're hoping nothing goes beyond 14 weeks. So on this deal, we're paying my private lender. So basically, they gave me the $52,000, and I'm giving them 10% on a 2-year note. And so if we hold it for 12 weeks, they're going to make $1,200. And if it goes longer, say if we held this for a year, then they would make the whole 10% annualized return, which is going to be $5,200. And that may not sound like a lot to some people, especially if you're an active investor, but you got to understand it from the perspective of the private lender. So it's about as passive as you can get outside of owning a REIT, which is a real estate investment trust. That's more or less like a mutual fund for real estate. And that's also, there's market volatility in that. You have very little control. So for this, for someone not to have to put any work on the active side of the house and to be able to capture that 10% return, in the worst case scenario is that they have a house that's cash flowing, probably around 700 plus a month, is a pretty good downside. So you're protected as long as you've collateralized with a good project. And I think for all private lenders, it's important to vet the person you're lending the money to. And if they're the operator, it's one and the same. But like for me, I'm not the operator. So you'll want to vet the operator, and just to ensure that you trust that person and their systems and processes that are going to protect your capital. And from my perspective, as long as both of those are go and where the project's at and you're comfortable with those risks, then it's a good option to have if you don't want to put in the time and effort of learning how to do this actively on your own. So if you guys have any questions about private lending, whether you want to be a private lender or you're looking for private lenders, you can reach out to me. We can talk about it. And I have more of these flips coming up. So if you want to be a private lend and you want to discuss some of these options and how all this works, give me a ring too. I will put my contact information with this video, and you can reach out and we can discuss what that would look like if you are interested in doing that with either with me specifically or just in general. I'm happy to talk about private lending and really investing at all. So hopefully you guys got something out of this, and yeah, let me know what you think. All right, later guys.